What's up, YouTubers, market participants, and day traders? You just stumbled upon my channel where I'm going to review my day trades daily. So if you're new to the game, you're struggling to make money, and you got a small account, you found your boy. Go ahead and like, comment, subscribe. Definitely join the family because AKA Will the Wise, AKA Will the Market, and AKA your boy are here. Let's jump into these trades.
What's up, YouTubers, day traders, and market participants? It is your boy, Will of the Market, your day trader with you, going through my steps and processes through everyday market action volatility. Today was an actual easy setup. Didn't take full advantage of it, made some small little mistakes, but nonetheless, your boy is up and is called the snapback method. So let's go ahead and jump into today's training session. So I went ahead and took 3 trades, knocked 2 out the park, got a total of $308, right? So I believe I was already up. I was at 350, 354 in like 20 minutes of the first 20 minutes of the day. So that was already powerful. It gave me over 100% returns on on one of my positions. So I wish I should have had, the video should be way higher than that 105, but we're gonna go ahead and get into it and I'll show you exactly why. But first off, class is in session, the snapback method. So this is basically what that means. This is, look at this chart. Look at how all the moving averages. So this is the 200 moving average. The purple is the 20 moving average. So here on this side you have the 20 moving average, and then you have the 20 down here. So notice how this is all last week. This is a 5-minute chart, but you're seeing all the way till Tuesday, Monday. So this is Monday of last week. Look at the distance between these two, right? Distances between the 200 and the 20. It's fair. Look at it here. It's pretty fair. Look at it here. It's pretty fair. Now here, it's starting to get extended, right? Here on Friday, it even got more extended. So this is a clear play here. Look at how Monday opens up. The price opens all the way down here. The price opens all the way down here. We already have this huge extension from the 200 and the 20. We already have it. We've been getting this wide range action between them. They have been separating. So they're going to have to snap back. Now the price, not only does the price get away, it's all the way down here. It's all the way down here. So easy snapback play. And as you can see, first 30 minutes, huge buying power back to the upside, because if you buy here, sell here, even when you get back to the moving averages, you get a good decent return, right? So that's what I did. It's a safe bet. You can only get so far away from the 200 moving average before you get pulled back. So let's go ahead into the trades. So using that same snapback method, honestly, I didn't even wait. Because I knew what my reason was for entering these plays. I knew it was the snapback method. So as soon as it opened up, Tesla was down like 10% on the day. That's ridiculous already when it's already so extended to the downside. You can see that I searched for options and then within a minute and 40 seconds of the market opening, I bought the options. 70 each, realized that I only had 2. This morning I did, I saw it all. I got so happy and anticipated the money that I didn't execute it well, but I didn't do bad. So bought the 20, bought the 2 here, then bought 2 more. I should have had 4 to jump with at that 140. So that's kind of my first little mistake. Not a big mistake, but a small mistake. Next mistake here is just giving away contracts too soon. Sold the first one on the first 5-minute candle, that after the first 5-minute candle down here. I sold it down here at the low of this candle. You know, at the low of this, at the start, I wouldn't say low, but at the start of this candle. If I would have at least waited for this one whole candle to finish, all these contracts right here would have been even higher. They would have been at like 140 or something like that. That would have been 30 bucks here, all the extra difference right here added up to that would have been huge, right? So didn't handle that too well. The entry was good because I had snapback method already in mind. So the location was there. The everything was good. We were good to go. I did add to the play on this candle, and the reason why is because this candle was red. It was red, and then it started decreasing, and then it went green. So as soon as it went green, I punched another contract, which you can see here at 944. Punched another contract, and then I got rid of the last two contracts here, right up in here. So I could have waited, and I should have waited on one contract. One contract I should be letting my stop take me out. On the last contract, I gotta let my stop take me out. So that's something I'm still working on, is having that resolve through the market volatility. But pretty straightforward. It was a very good trade nonetheless. My position size could have been bigger. That's another mistake here. 280. This should have been a $400 play. Bam. If you're keeping your account between $2,000, $3,000, that would have been a perfect entry. Would have been the between 300 and 400, as opposed to, because it's a higher resolve play. You have to, for your higher resolve plays, you have to go in deeper, more, deeper, stronger, harder, all of it. All right, let's jump to the next one. NVIDIA, same idea, same method, same type of snapback idea. I didn't even wait. I actually bought the NVIDIAs before I bought the Teslas. I did buy 4 of them right off the bat. This should have been 6. This position was too small. I should have had higher conviction, right? So, and then here's the next mistake. I sell 3 literally on this, because I remember clicking it, and I wanted to sell 1. I wanted to sell 1. It had 3 in the algorithm, so 3 sold. I should have just bought them back right away, because the price just kept going up. But sold right here. Could have at least waited for this whole candle to finish, which would have given me the 116 or something like that, I believe, because that's what I bought in right here. So still handled the play kind of well. I got in here, shouldn't have got out here, added here when green took over the red, added here, and then this candle scared me out. I don't know why. I had profits, and it scared me out. My stop should have been here, waited for this candle to close, stop here, waited for this candle to close, stop here, waited for this candle to close, stop here, and then this red candle would have took me out for whatever my last contract would have been, as opposed to me grabbing at my gangs. But nonetheless, still a great trade. The only thing that really sucked here was getting rid of the 3 way too soon. That should have been 1 contract, and I probably would have got 1 more out at the end of this candle. And I think it would have just ran so much more smoother. But it is what it is. We still have a profit on the play. Next up, we're gonna go with NVIDIA. So I'm playing the NVIDIA downward trend here because, as you see, we're in a huge market correction right now, and the market is going down. So I waited till we got up to the 20 moving period average. Once we got there, red took over green, so I took the position. 2 contracts only, but the contracts were more expensive because I was looking for a quick move down. Because this is a big move up, right? Everything is at a discount right now. This is a big move up, so I'm kind of considering like maybe this is a good jump up, and it turns out that the move up was not a dead cat bounce, and it was more solid. So I ended up getting stopped out of the position here, and the stock continued to go sideways for a little bit. I don't know what it's doing now. If it wanted to make that next leg higher, or if it wanted to make that next leg lower back into like the middle of this move. I don't know. But I don't care. I already made my bread and butter for today, so gonna go ahead and move on and enjoy the rest of my day. Next thing we got here is lesson of the week. All right, so uh, one thing I'm going to be focused on in this entire week is looking at higher time frame setups, because all last week the the shorts were paid, and the shorts were the obvious trend play on like the 15, the 30 minute, the hour charts. That would it told the whole story. And if you're always caught up in the 5 minute chart and trying to play the accelerated moves that happen in this burst of time, yeah, you can make money that way. But when you really want to make the hyper extended moves, the 200-300% return in a few hours to a day, then you really want to stick to the higher time frames. So that is what I'm going to be doing this week. Today, I would say it was completed because the snapback. On the higher time frames, you can see everything's too extended. On the 5 minute was, also with the 15 and the 30 minute, they looked very similar already. The moving averages were separate apart. The stock price is even lower, bringing it down. All has to snap back and come to the narrow state, right? A more parallel state, right? So that was the play today. No whales, caught no whales today. Maybe I didn't hang out long enough to catch a whale because the second leg for most of the plays didn't even develop yet. So something I could work on and being more patient. But today was a quick boom, boom, 20 minutes, boom, taking it home. I believe that was it though for the presentation. I hope you guys all have a great rest of your day. It's Monday, start the week off right. And I hope you guys catch me in the next one. Like, comment, subscribe. Peace.